Yikes, guys. Yikes. Beyond Meat, back down to $1. The short squeeze didn't happen. Currently sitting at a $489 million market cap. Here's my take on it. It's not showing, but in the past month, it peaked at around $6, $7, back all the way down to $1. Hopefully you didn't get caught in this stock. Just from a quick scan of crypto Twitter, looks like a ton of people are still bullish on this stock, and everyone's still saying there's still a short squeeze. So I might be wrong, but let's go ahead and check it out. Here are the fundamentals. It is pretty much in the category of the meme stock, so anything can happen with this thing. But for the people that want to play it safe, check out these fundamentals. Top line, total revenue, posting $70 million, which is down 13% year over year. Beyond Meat is currently sitting on 3 consecutive quarters of total revenue declines, and also posting negative $1.44 in earnings per share, down 251% year over year. Profit margins are trash. Just by looking at the income statement, guys, I don't know. Some of you guys might be cooked. Latest cash flow, they posted negative $38 million. That is down 76%. Net income posting negative $110 million. That is down 316% year over year. That is really bad. Really bad, guys. Cash is sitting at $117 million. If you scroll down to their long-term debt, though, $1.2 billion of long-term debt, guys. And if you scroll down even further, look at this. Total shares outstanding from 76 million to 453 million. If you got in this stock, they diluted you. They raised the money by issuing you shares. So let's go ahead and go to the transcript real quick. Let's just double check other figures real quick. 378 million shares. No insider buying, of course. Let's see what they say in the transcript. Total debt outstanding was approximately 1.2 billion as of September 27th. 1.2 billion, but they did have a restructuring. So if you take a look at this part on the bottom of the Q3 2025 earnings transcript, they talk about how 1.1 billion of the principal amount of the 2027 convertible notes was successfully tendered in the exchange offer. They pretty much did a debt restructuring. They reduced debt by 900 million, about 75%, with the potential to cut another 200 million, totaling over 90% reduction if they are fully converted. Basically, Beyond Meat raised 150 million. They wiped out their debt, but they just extended the debt maturity of those payments to improve their flexibility amid their turnaround. It's like this long-term debt is just getting pushed back, so they're not going to be paying a lot of interest payments right now. So interest expenses, are super low. So super low interest expenses. So what does this all mean? Well, the goal was to reduce a lot of that debt that they were holding, 900 million, easing near-term liquidity for the company while raising 150 million in cash. But what Beyond Meat did was utilize the ATM market equity offering program. They issued new shares onto the market. The company sold new common stock directly into the public market following the Q3 2025. That action generated 148 million. But yes, existing shareholders or people who bought at the top, you got diluted. You guys got diluted. Existing shareholders were diluted by both actions. One was the debt exchange. Conversion of old notes to new shares means a huge number of new shares that are issued, significantly enlarging the share count of Beyond Meat. And also you guys got diluted by the at-the-market offering. Remember, they did the at-the-market offering this month, and they probably sold it when the stock was selling at the peak around $5, $6. Direct sales of additional new shares in the public market further increased the share count of Beyond Meat. Again, diluting the existing shareholders. Now, the intent of all this is to protect the company's solvency. It gave them a little more time. It pushed back their convertible notes, and it's going to help them turn around. So a lot of people that are bullish on this company are accepting dilution as a necessary trade-off for a turnaround in this company. So yes, Beyond Meat will survive for a little bit longer, but at what expense? They triggered substantial dilution to existing shareholders. And as of right now, it doesn't really look like there's going to be a turnaround soon. I mean, they just had one of the worst net incomes, down 316% year over year, negative 110 million. We haven't seen any improvements on their cash flows. And profit margins, I don't know about this one. And lastly, just to finish it off, another thing I don't like, if you go down to the question and answers part, guys, the CEO says he is personally moved by the tremendous support we have from the retail investors all the way to Korea and have great enthusiasm for winning on their behalf. So it looks like for the people who bought this stock at the top, thanks for saving Beyond Meat for a little bit more. I would stay away from the hype, guys. There are safer companies to invest in. If you're investing in this company, just know that you're gambling. There are still a ton of people bullish on this stock and still talking about a short squeeze, which could happen. It could happen. But as of right now, Beyond Meat is in a deep turnaround. They have 150 million in cash. The path back to growth for Beyond Meat does remain questionable. We'll just have to keep watching this company and see how they do in the next couple of years. But as of right now, if you want to play it safe, I would stay away from this stock. Anyways, let me know in the comments below. Thanks for watching this video, guys, and we'll see you on the next one.